Hello and welcome to Kemet Capital, community of holders and seekers of African capital. I'm your host, JS, and you guys already know before we start, we begin with our word of affirmation. Our guiding principle is the Cobb Douglas function, guys. Last week I told you that you can apply this formula in all aspects of your life, and I'm hoping that you already do. So today we're going to react to this video pertaining to how African corporations are raising capital. All right, let's jump into the video and we're going to react as we go along.
Africa Medical Supplier is raising 5 billion Rwandan francs through Rwanda's first healthcare bond at 13.25%. CEO Fabrice Shemangoga now joins CNBC Africa to discuss how this capital will help grow their operations, refinance existing debt, and also improve healthcare access across Rwanda and the region. Mr. Fabrice, a very good morning to you and thank you so much for your time.
Morning to you, and thanks for having me.
All right, so this is very timely. It's a first we're seeing here in Rwanda. That is the first Rwanda's healthcare bond that we are seeing. That's a dynamic move that we're seeing here. So what does this mean for you? And also let us in on the financial rationale behind this decision of this bond in the first place, and also the strategic advantages that you are going to see from this.
Guys, before we start, just a quick headline here on the African medical supply landscape. So the is a multi-billion dollar market, and it's still growing. The latest estimate stands around like $4 billion. So we have to understand that most African countries remain highly dependent on imports for medical equipment and consumable. It's reported that around 70 to 95% of the continent rely on import, which is a staggering number. So this creates like a persistent logistics, regulatory, and foreign exchange vulnerability. Because as you imagine, if you're buying goods from a foreign country, you need that foreign country's currency to do exchange with them. So you put yourself in a risk. So in this case, we have the African Medical Supply Company headquartered in Kigali, in Rwanda. The company was founded in 2008 and it serves hospital, pharmacies, NGOs, and government purchaser in Rwanda and the East Africa region. The company offers equipment, consumable, rapid diagnostic, and after-sales services and participate in tenders. So we have to understand a little bit how the market is segmented. So the market has different type of product offering. So the first one is hospital capital equipment. So you have your imaging, your operating room equipment, and so forth. So that's the heavy equipment. And then you have the diagnostics and lab instruments, consumables like gloves and syringes. You have the pharmaceutical, separate. Those are separate, but they're actually linked. You have a point of care rapid diagnostics like thermometer and those tools to detect bacteria and viruses on the spot. And you also have demand drivers that include public health programs, private hospital expansion, diagnostic scale up, and donor procurement. So we still rely a lot on donors. And the distribution model of the sector is very simple. You have the international manufacturers that distribute to regional importers or distributors, and those give the product further down the line. You have the national wholesales like African Medical Supplier that we're going to study today. And you have the hospitals, the clinics, the NGOs that are at the end of the line. So many distributors also offer like installation and after service care, which after service, not care, but maintenance, which is a big element on the type of income and revenue that those company can make. So we're going to listen to exactly what this bond entails and react as we go along.
Thank you. Yes, as you mentioned, this is the first care health bond happened in Rwanda. And the decision to move toward this, it's the opportunity that the bond can offer for long-term investment and the future expansion for the company. So we've been existing in business for the last 18 years. So we have gone through other facility models the banks can offer or other trade finance institutions. But the hic behind this, it's a short-term facilities, which makes us give us more pressure to repay back the money and limit us to future expansion. So as an Africa Medical Supply company, we have a bigger vision. We aim to reach countries where the healthcare access is still problematic, and we think to have at least a 5 years bond that the bond can offer today will make us move and grow our business.
Guys, we just to give you a little bit of a background on bond issuance. Most of the time, more often than not, bond issuance will happen before equity issuance. So the company will borrow money when it's still private before going into the market. So it's a huge component of how, young companies are raising capital for expansion. As he explained here, when you have short-term facilities, first of all, those short-term facilities are very expensive in terms of interest rate. So you might pay upwards to like 20%, and this is in the developed world. I can only imagine in Africa where already like regular bonds are above 10%. So you can imagine for a short-term facility like a credit line and stuff like that, it must be staggering. The interest rate must be like, I want to say punishing because nobody is supposed to afford that and expect it to grow. So in terms of capital raising, bond makes a lot of sense because as you can imagine, as a bondholder, you're not entitled to participate in the company revenues. You're just expected to collect the interest that you charge on the money that you lend to the company. So for the company, it's very beneficial because now when you have money that you can spread over 5 years, it allows you, to make strategic planning, to build, to focus on expansion because you have now the capital and you have time to achieve those KPI, those key performance indicators that will bring your company to the next level. So bond raising, it's very crucial, especially for a developing continent in like ours, where a lot of stuff are still in the infancy and needs to be built up. So instead of going straight to equity capital, bond capital, it's also very valuable and efficient in that way.
And so far, you're targeting Rwanda and the DRC, right?
Yes, but other African countries as well, include Guinea, Congo Brazzaville, and other countries where Africa can give opportunity. But we have appetite because I think now there have been among a few companies with a good rate in Africa, and we think where opportunity will ask us to go, and we'll go there.
Yes. Let us look at this interest rate that you're seeing here, 13.25%. You've mentioned it's 5 years. 5 years is a short term. But how does this compare to benchmark yields that you're seeing in Rwanda's fixed income market?
Yes. So if you look at the healthcare business itself, and the demand and the rollover every year we have to see, and you can see it from our financials, we think it's quite a good appetite for any investors to go with a higher yield in this case.
Of course, guys, 13% on bond yield, it's extremely generous. Can you imagine parking your money and collecting 13% return? That's huge, guys. Even like the most mature equity markets in the world, like New York, Frankfurt, London, Toronto, and so forth, on average, the return is not 13%. It's around 8 to 6. So if you have a bond which is riskier, of course, we are talking about African bonds, so they include like political risk and so forth. But still, at 13.25%, this is a very bargain for any investors. And the beauty of this issuance is that it was it was made in local currency. So local players, like local household, can invest in this company. And as African Medical Supplier, these guys can um, become, as we talked last week, from national leaders to regional powerhouses. So I'm all for it. And I encourage anyone in Rwanda right now who has access to the fixed capital market to look into this company, because the healthcare system, we already discussed earlier in the video that 70 to 95% of the supply is coming from imports. So we need like local players that will become regional, powerhouses, and further down the line, compete with global companies.
Offering 13.25, for us, we think we want to present the high interest in the healthcare, and the demand is there. We hope that by giving that kind of yield will attract more investors for us. And of course, the company will still make business. And we have gone through financials, and this is something possible we can give.
And from whom are we seeing this demand from? Are we looking at maybe retail investors, institutional? What are we seeing? And also, I am keen on the pension funds, insurance firms at the same time, and also maybe the deliberate push to open up access for individual Rwandan investors. Let us in on who is looking or who is demanding this bond here.
Hope it's everybody.
Actually, the demand is for everyone. We are looking for individuals who can invest a minimum of 1 million Rwandan francs to start with. So this is a minimum subscription for a bond, but we are open. So we can also look for pension funds, for other corporate.
I guess just to give you clarity, while it's talking about the 1 million, let's say you're targeting an issuance of 30 million. So the minimum share that you can buy is you cannot buy, you cannot invest, let's say 500,000. You have to invest a minimum of 1 million. So that's the base subscription price or entry level, if you
institutions. So the sky is the limit, but we have to reach our 5 billion soon. So that means we are closing our offer a week from now, which will be on 7th August. And we think we'll see many response and investors to our bond.
August 7th it is.
Yes, August 7th, where we stop the 2 weeks opening subscription process.
And looking at the refinancing existing debt or where this bond will go into, let us look at what this means for you as a company in terms of liquidity, cost of capital, and even future expansion capacity.
Yes, so part of the bond we pay some debt. As you know, we work on a project, and most of the project we get paid after completion, so we still also have some receivables. So for us, we'll create a balance in between, but also for new projects. So we explore, let's say, a minimum of 15 projects per month, which is quite huge, depending, can range from $1,000 to $1 million. We think making a fast return of this money will help us even to give back to the investors. Yes.
And for retail investors, of course, whom many will be exploring bonds for the first time, what's your case for healthcare and the AMS specifically? Let us look at it from a credible long-term bet in Rwanda's financial ecosystem perspective here.
So what I can say in general, Rwanda is offering a new platform where we can get money. So the concessional ways, people think we just need to go to the banks. So the banks, they're still helpful, but I think we have to become the first in everything. So today we are the first healthcare company who went through this bond process. So I encourage.
And this is huge, guys. He's not only the first healthcare company, but in general on the continent, the bond. So you have buy two type of issuance. You have the sovereign bond and you have the corporate bonds. So in Africa, sovereign bonds are the majority of the issuance. They account for over like close to 90%. I think it's 89% or something as of 2010 from the data that are collected from the IMF. So in 2010, based on the IMF report, 89% of bond issuance on the continent were sovereign bonds, meaning government issuing bonds, to for infrastructure or so forth. We don't know. We don't always know what they do with the money in Africa, but in terms of corporate bond, which is a critical element of any economic development, when corporation are actually driver of economic growth instead of government, like we see in most Africa. So having those, having access to capital can, speed up their growth. So it has to be more democratized. And I'm glad to see that this issuance was also targeted to, retail investors, that's you and me, guys, household pop and moms, mom and pops type of individuals. So for those guys to even be aware that an issuance, a corporate bond is issued, it's already a big deal, because on the continent, the capital market is not very, democratic. It's not generalized within the population. The role, the need for it, and the critical element that it brings to economic development prospect. So all in all, I'm very pleased with this issuance. Though in the world, like right now, in the developed world in general, the split between corporate and equity, it's around 90, 70, 75 to 25%. So you have 25% um, corporate bond issued versus 75% of equity issued. That's all over the world and across market, emerging, developed markets. So still, equity is, has a higher book value, if I s- if I can present that way. But still, corporate bonds are essential. They're critical, especially for the growth phase of any institution, of any firm, and especially in the healthcare sector, as we say, dominated by foreign companies. We need more of these guys. We need to give access. We need to give access to capital to those institutions, because medical supply of the continent is owned by African. That's a win already.
Others to follow. And the sky is the limit. We have to aim high. We, thanks to the government of Rwanda, who
Agree.
are putting really the bar very high. So by serving first Rwanda as our country, we think we
Mm.
can take also our expertise outside Rwanda, and which we have started doing for the last 4 years. It's something we need to start somewhere.
Yes. And can you talk maybe about numbers in terms of the demand that you're seeing so far? How is the uptake? Maybe like 10%, 50%? Where are we at?
In terms of expansion?
Yes.
Or-
No, in terms of the interest that it is, gaining momentum so far, the traction so far. How is it like?
The issuance.
I think the track for the bond is good. The response is, I think, promising. So we've talked to BK Capital, who is our senior advisor in this process. So they say people are responding.
Mm.
So I think maybe I can pledge to CNBC team to also come and try to go into business.
Indeed.
Yes.
And we also did have an earlier conversation with BK Capital's MD, and he really did say quite a lot in terms of the first healthcare bond that we are seeing in the country. We do hope to get good returns from it.
Yes, yes. Fortunately, yes.
Yeah.
I can say it's a big yes. So even if you go look at the perspective of the world, if you look the SDGs, so the goals of the world is to
It aligns very well.
yes, it aligns very well to give back the primary health care, and where Africa we are lacking behind. So I think we have a lot of work to do.
Indeed, a first for Rwanda and the DRC and also neighboring countries. Yeah, Mr. Fabrice, thank you so much for those great insights.
Thank you.
All right, guys, we're coming to the end of the video. Interesting one, as always. A healthcare bond, corporate bonds in general in Africa. Good news for the development of any sectors when you have investor demand in your bond, knowing that you're going to use that bond further the projects of your firm to expand the operation of your company. So all in all, great news. I just wanted to share that with you guys. and let me know what you think in the comment. Stay safe out there, and see you in the next one. Bye.